Business Edge on News Central. I'm Tolulope. Adeleru-Balogun. Our headline story: OPEC is meeting this month. Now, oil prices rose from the biggest slump since November 2020. This comes just before the meeting of the world's largest oil producers, as the Organization of Petroleum Exporting Countries and the Plus are meeting. Now, OPEC is meeting to discuss how much crude it should supply in the coming months. We'll look at how this could affect the price on the international markets and much more. Welcome. This is Business Edge. The U.S. stimulus package is still pushing oil prices above $60, despite the slight drop in cold weather forecast in the Western Hemisphere. U.S. crude rose 2.2% to $62.90 a barrel after opening at $61.53 and hitting a low of $61.53, while Brent crude rose 2.2% to $65.90 a barrel after opening at $64.50 a barrel. In Nigeria, fuel queues have continued to swell across the country despite assurances by the Nigerian National Petroleum Corporation that it was not planning any increase in the pump price of petrol this month. Now, under the deregulation of the downstream sector of the petroleum industry, the pump price of petrol is tied to the price of crude oil on the international market. Now back to OPEC. OPEC is currently withholding just over 7 million barrels a day, or about 7% of the world's supplies, and is committed to restoring about 1.5 million barrels in stages over the course of this year. And that is, of course, depending on market conditions. Riyadh and Moscow have differed on how quickly to revive the halted output, with Russia generally keener to resume production quickly. The meeting happening this month is to decide whether they can revive some more of the production halted during the coronavirus crisis. Now, joining me is Bello Tukur. He's the managing director, Riverlake Nigeria. Bello, welcome to Business Edge, and thank you for joining us once again.
Thank you. Thank you very much.
So let's start with where OPEC is. So OPEC Plus initially agreed to cut oil production by a record 9.7 million barrels per day last year, before easing the cuts to about 7.7 million and eventually hitting 7.2 million from January. OPEC leader Saudi Arabia has since taken on voluntary cuts of 1 million from the beginning of February throughout March. And this has led to an impasse between oil giants Saudi Arabia and Russia, and many are uneasy about this. Can you explain a bit more about the position that Russia and Saudi Arabia hold in regards to the oil prices and oil production?
All right. Okay. Thank you very much. On the Russian side, they are looking to get probably about 1.3 million barrels back into the markets. According to the Russian oil minister, we need to the supply cuts needs to be halted so we can add more barrels onto the markets. Now, with this meeting taking place between these two giants, what's likely going to happen is we have two scenarios. If Saudi Arabia maintains these cuts for the next 2 months, that's for March and April, we might probably see a sort of like a stabilizing price of oil at $60 to $65. However, if more oil is brought onto the market, we would probably see the price going below the $60 levels. As you can see, most of the recent hike in the oil price was actually due to one of the significant factors, I would say, was the big Texas freeze, which brought a lot of the oil production in the state of Texas to a complete halt. So that has more or less driven the futures markets and has brought the price of oil up to about 60. But in terms of demand, I don't think we are actually at the levels before the pandemic hit in February last year.
All right. So we know that Saudi's energy minister, Prince Abdulaziz bin Salman, in February urged caution. He said, and I quote, "I must warn once again against complacency. The uncertainty is very high and we have to be extremely cautious. The scars from the events last year should teach us caution. So we've seen that the factors, like you said, the Texas big freeze has led to an increase in the oil price. We're seeing this sort of tussle, I guess we might say, between Russia and Saudi Arabia in terms of production. We also saw what happened in the last meeting where there was a note to countries that are not staying within the stipulated production numbers as well. Do you see OPEC members becoming complacent with the international price as high as it is? Is he right to urge caution?
Well, that remains to be seen because we've seen an aggressive vaccination all over the world, and that has sort of brought some sort of confidence and stability in the market. A lot of these prices, I believe, are probably short term. This is probably due to a weakened US dollar, and as well as the fact that the United States, the new Biden administration, I would say, has banned fracking on federal lands. So this has sort of reduced the supply in the market, and that has sort of pushed this short-term demand. We are also seeing a lot of rig positions in the United States. So the forecast in terms of production in the US is very, very low. So yes, we need to apply some caution. But as to us in Africa here, this it might probably be a positive sign to help us recover.
Okay, and we will talk about that because on everybody's mind is global economic recovery. But you're mentioning a number of factors, a ban on fracking right now in the U.S. under the Biden administration, the Texas big freeze, which of course is not a permanent thing. But the selling price of oil has been hinged on several factors. Which one of these do you think is actually able to give more resilience to maintain that price at a longer period? So we know the freeze is over, the snow is melting, but again, with the U.S., you're also getting into what they have as hurricane season, which also can affect it because of the Gulf of Mexico into Texas and some of those oil-producing regions as well. So which one of these factors do you think will help the oil price to stay up a little bit longer?
Well, the key is the amount of vaccinations that can be administered within the short term. I probably believe if the pace is sustained and we start seeing more global economies open, this can sort of bring confidence to the whole market. However, there is probably a looming recession that might be coming in Europe and other Western countries. So it's important that at this point we keep the pace of the vaccination. That would actually be the major factor that would see the price maintain. However, like I said earlier, if the OPEC Plus meeting, after the OPEC Plus meeting tomorrow, and the two giants decide to bring back more production onto the market, it depends if it's going to be gradual or if it's going to be an immediate increase in supply. That would probably that would determine whether we will still see the price below $60 or it will hover between $60 to $65.
Okay, so we'll get into tomorrow's meeting, but very quickly, the meeting that happened in January actually reached a number of agreements. Now, they noted there that the high conformity levels contributed significantly to market rebalancing and stability. Between May and November, participating OPEC and non-OPEC countries contributed to reducing the global supply by approximately 1.9 billion barrels, including voluntary adjustments. And this seems to have been key to the rebalancing of the market. So in terms of this, let's talk very quickly about these non-OPEC countries that have also, in a way, fallen in line with OPEC. How do you think this happened? Break down what happened here in terms of this stability that everybody was able to reach from January's meeting.
Well, after the January meeting, it was expected that the OPEC Plus countries will add 500,000 barrels to the supply. However, we have seen Russia and Kazakhstan adding an extra 75,000. So the Texas freeze, like I said, was a bit unpredicted. So the key for all the members is to actually ensure that they actually get a fair price for production. Some of the countries are suffering quite significantly, especially us here in Nigeria, where we have high production cost. So these cuts, this high increase that we've seen, if you like, has come as a positive. So I would believe after the meeting tomorrow, we might see the price go below the $60 because the futures markets have already shown a sign of easing with less cash being injected into the sector.
What's the punishment, or maybe let me say, better word is consequence, if a country is a member of OPEC? I know that Nigeria and a number of other countries sought exemptions rather in 2020 and 2019 to the OPEC barrels per day that were given, and we were granted exemptions at least twice. But in terms of conformity to this very, very strong union that Saudi Arabia has really sort of held sway over for a number of years, and then when you add the plus, you have Russia and, as you said, Kyrgyzstan coming in, what actually is the punishment if a country decides not to conform? If a country decides to say, you know what, my needs are greater, I need to produce more than what OPEC has said I can produce, what happens?
We as a country were given an exception because we needed to recover economically and also to have enough money to support our budget provisions. There is no major penalties, I would say, because all this, the OPEC itself is a voluntary organization. And Russia, being a member of the OPEC Plus, has been very, very compliant, as opposed to even the likes of Saudi that has pushed for more cuts, basis the fact that they have low cost of oil production. So if they decide to ease these cuts within the next 2 months, that will bring back their production to probably about 9.4 million barrels a day, as against the 8.1 million that is expected to be produced this March. So in terms of punishments, there's no significant punishment. Some countries are given leeway mainly because of economic reasons and the need to fit project provisions.
Okay, so finally on the previous meeting, because we'll take a break and then we'll focus on what's coming next. The meeting also drew attention to the exceptional year of 2020 as an outlier that distorts the latest 5-year average of OECD commercial oil stock levels. Now, they recommended in January that they retain the 2015 to 2019 average as a more representative metric while keeping the latest 5-year average for the time being. When you look at that and now you look at the price of where oil stands today and then the potential of what could come out of the meeting tomorrow, what do you make of all of this? So you're seeing a metric that is coming from a year that has disrupted everything we know basically in modern human history, and then you need to put that together with your projections going forward. So where's the compromise? Where's the meeting point?
Yeah, well, it's the major sort of consumers of oil, if you like the United States, have to be the ones in the forefront of this. Well, from what we can see, there's a possibility that we might not see the demand for oil increase within the next 2 to 3 years. So as regards to the forecast and what the OECD economies are expecting, the price should probably remain stable. However, the Biden administration is pushing for greener energy. Hence why this short-term sort of increase of oil is not really correlating directly with the demand as the market is, because we have even seen the likes of China putting Angolan oil futures on offer. So there's no particular answer to this, I would say, at this point. So
Okay.
we have to just wait and see. So maybe after the meeting, we can see the international energy forecast for the rest of the year. So that will probably give us a better understanding.
All right, Bello, we're going to take a quick break. When we come back, we'll look at tomorrow's meeting. What is in it for African producers? Also looking at Nigeria that is now seeing oil price above what was on the budget. What happens next? And will the status quo be maintained? Who sort of wins? Saudi Arabia, do they get what they want? Or does Russia? And does the world get back on the path to global economic recovery? That part of the conversation after this. Bello Tukur, the managing director of Riverlake Nigeria, is still with me on Business Edge as we look ahead to tomorrow, this month's OPEC meeting. So Bello, very quickly before we start looking at what African producers stand to gain, when the alliance gathered last month, the Saudis went ahead, as we all know, to double down on their strategy of output restraint by making an extra 1 million barrel a day cutback that would apply in February and March. Now, their move has seemingly paid off, helping to drive the recovery of prices. For oil importers, there are growing signs that the strengthening market is becoming a problem. We heard from the Energy Minister of India, Dharmendra Pradhan, which is one of the biggest buyers of OPEC's crude, and he said that the higher prices were also harming the global economic recovery. And this is what everyone is focused on, economic recovery. What is the link? How is this working? How is it that with oil prices going up and exporters making more money, and yes, I know importers having to pay more, he's saying it was harming the global economy. What do you think about that?
Well, a lot of countries had to introduce like follow systems, like the UK, for example. So this has really hampered a lot of businesses. We've seen a huge decline in the aviation sector. We've seen that market completely collapse, with some companies not even expected to recover, even post the pandemic. The hospitality industry has also been affected quite significantly. The major OECD countries, if you like, who are the major buyers of all this oil, they will need a cheaper oil to be able to recover. With a high oil price, will further drive all these countries into recession, with a lot of, with the likes of the UK and the US, all reducing their economic growth for the year. So yes, it's quite important that we have an acceptable price of oil. However, for the OPEC members, it's always a difficult position, because they need to be able to make sure that they get a fair price for their members, and at the same time, the price is subject to supply and demand. So they have introduced a lot of cuts, and they've been quite compliant in ensuring that there is some sort of global collaboration. However, it's also important to get a fair price for the commodity, due to the high cost of production in some of their member states. Mm-hmm.
And one of those member states is Nigeria, and there are a number of member states here on the continent that would definitely be seeking higher prices. Now, we know for Nigeria now, this price that we currently see oil is above what we have on our budget for the year. So that's a surplus for us. What current situation would be in favor of African producers the most? I feel I have the answer, but I want you to say it. Russia is very likely still going to seek that production be increased, whether immediately or in stages. And barring probably an act of God, Saudi Arabia is still going to urge caution. So which one of these two, and if there's any other scenarios, is in the interest of African producers the most?
Like I said, if we bring another 1.3 million barrels back into the markets after the OPEC meeting tomorrow, then we might see a decline in the price, because we've seen the futures market already decline. As regards to the benefits for us here in Africa, we need a higher price of oil to be able to sustain our economies, because most, for example, Nigeria and Angola are heavily reliant on earnings from oil exports. So these prices reflect sort of positively for these nations. But however, it's quite it's a bit of a challenging situation, if you like, because we have a situation where we want to maintain a $60 to $65 oil price as against other OPEC Plus members who are happy to have a lower price of below 60.
All right, so Bello, as we wrap up now, I'm going to ask you to probably put on your magician's hat or look into an 8 ball and see if you can predict the future. What do you think is going to come out of the OPEC meeting tomorrow? Do you think the status quo will be maintained? Will there be some amount of compromise and maybe Russia can get a bit of a bump in terms of production, whether immediate again or stage? What are your projections for tomorrow's meeting?
Well, I'm projecting we would have more barrels coming to the market, which would reduce the price of the oil below $60 a barrel. Even though the Saudis might probably spring up another surprise and decide to introduce more production cuts. But we're quite optimistic that we should probably have an agreement where we can sustain between $60 to $65 if the Saudi production cuts are eased in phases.
All right. We'll watch to see what happens. And of course, definitely we'll touch base with you when the news breaks and gets a bit of contextual a breakdown of what the decision is and how it was reached. Bello Tukur, the Managing Director of Riverlake Nigeria, thank you so much for joining me on Business Edge.
Thank you.
All right, let's get straight into it. And that thing we're getting into is nothing else but NC4 to watch. And interestingly enough, it's OPEC. That's top of our agenda. We have the Secretary General of the Organization of Petroleum Exporting Countries has said OPEC and its allies need to remain disciplined with their production to ensure full oil price recovery as the global economy continues to rebound from the COVID-19 pandemic. He added that global COVID-19 infections rose in the last week of February, indicating that the pandemic still posed downside risk to the economy. The African Development Bank Board of Directors has awarded a grant of $320,535 to the West African Monetary Agency to mainstream gender and economic community of West African states' core digital financial services regulatory frameworks. Now, according to the statements, the funds will support a gender gap analysis of several West African Monetary Agency strategies, including those for financial inclusion, gender disaggregation, data analytics, and more. Electricity distributor Kenya Power has announced plans to install charging points for electric cars along major highways, parking lots, and malls countrywide. Now, the move seeks to bring new revenue streams and boost demand for cars that don't use petrol and diesel. Although the company did not give timelines for the project, Kenya Power Managing Director Bernard Ngugi says they will begin with Nairobi. And finally, the trade exchange between Egypt and Italy amounted to 3.4 billion euros in the first 10 months of 2020, according to reports by the Italian embassy in Cairo. This compares to 4.3 billion euros in trade exchange reported between the two countries during 2019, according to the Italian National Institute of Statistics. And that's it on this edition of Business Edge. Don't forget to follow us on social media. We are at News Central TV. And if you've missed any of our interesting conversations on business and financial developments on the continent, you can find them on our website or also on our YouTube channel. Until next time, I'm Tolulope, Adeleru-Balogun.